Good evening, all. Hope you're doing well. We've got quite a bit to talk about today because we had the FOMC. We had a very smooth delivery from Powell, and it pretty much was balanced and not hawkish really at all. And the market's anticipating a very hawkish Powell, and so we're seeing an unwinding of dollar positions. They were being built up in the anticipation that he was going to be hawkish, but it wasn't the case, and it sent the market higher. We're now in euphoria. So there's 6 phases of the market sentiment summary now, from fear, extreme fear, apprehension, complacency, euphoria, then dominance. Okay, so we're not quite fully bullish because we've got one red cell here, and that tells us that the herd, they've been squeezed out, right? So if they add short, then that would be green, but they got squeezed out. So it's we're not quite there. We're not 6 out of 6 yet. We're not fully dominant. The bulls aren't in full control because we're seeing the bears getting ejected. Okay, so hopefully that makes sense. And we had a new look now of the QDB risk calc, which I think looks quite cool. Big hammering on the VIX, indices pumped, Dow Jones, S&P, Nasdaq, Russell 2000, Treasury yield, the 10-year, UK, France, Google, Apple, Tesla, and the dollar. Okay, so quite risk on, and it's all because of the Powell Q&A. He was actually really relaxed and even managed to make a joke in the press conference, which I'd never seen before. So we're in a state of euphoria, so it's quite bullish, and because of that, the dollar's not really going to be sought after as a safe haven. So we're going to see some dollar declines. So we can talk about the dollar now. So it looks like we were trying to forecast this resistance. It's possible that this is now going to be BC leg, like I said in Discord, and that's fine because that actually, the harmonic isn't that unusual. That's actually fine. If it was like this, that wouldn't be, because that's a regular pattern. We've actually made some distance, and so that from a harmonic view is actually okay. We could be BC leg complete, and then it means that we're on the CD leg, which is bearish. Okay, we don't know where this is going to end up. It's possible it might do that, but it does need to be below B, right? Then that's the completion of the harmonic. So we're going to be buy down here, but we're going to have to break B, right? So that's the situation with the dollar, and it's going to send cross dollar higher. Okay, so we're quite potentially BC complete. It looks fine. That's fine. Like I said, if it was like this, it wouldn't be. You know, that wouldn't be right. We've actually come a bit of distance. You know, we've stopped a lot of people out, unfortunately, and I think we're on the BC complete. So we're now CD, and like I say, D has to be below B. It could come below, and then it could potentially keep falling, dependent on risk appetite. If we continue pumping higher, then we can even break X, right? Which is then comes into this area, and then it'll definitely be a buy down here, because we would have broken B, we would have broken X, and then we're coming to this really nice demand area on the daily. So we don't know where D is going to be, but I think it looks like C is now probably set in stone. It will depend tomorrow, but it looks like BC complete. So that's the Dixie, and our robot's going okay. So that's something else we could talk about. We're up 9.5% on the month, and so this is the Euro USD. And in Discord, I was saying, you know, what happened is that we made these lower lows and things. It did look really convincing we were going to continue to fall. And then I was like, oh, wow, okay, so it looks like we might not be coming to get the stops. And they are, as forecast. So all that juicy liquidity up here, quite potential, especially if that Dixie goes to plan. I mean, there was all the way up there. Wow. What's that one? 111. That's 220 pips away. And that would then coincide with the Dixie doing this. Okay. So the robot's going fine. 9.5% return on the month. It's okay. We were up quite a lot, but unfortunately the last 48 hours were really turbulent, and we actually were down quite a bit yesterday. down a little bit today, but we managed to recoup a little bit of profit today, tiny amount of profit, but at least it wasn't a negative day. But yesterday was negative, so our overall total in the month has slumped, but we're still positive at 9.5% return. It's good, it's pretty decent. So that's the Dixie taken care of, the risk calcs taken care of, and tomorrow I'm going to make a video on the QDB scores because we've got this new fundamental data that takes into our currency pairs, GDP, the change, the unemployment, and the COT data, retail sentiment, and then it combines the COT and the retail in one. And then that gives us a summary, which is then the market structure summary. Okay, so tomorrow what the use case scenario is, that in case you're watching this video and you're going to watch tomorrow's, is that we have something that isn't ranging, because if it's ranging we don't want to be trading it. We want to take a sell or a buy, but then we want to see confirmation on the score change. So for example, AU had a market bias for sell, but we wouldn't have opened the sell because we've got green on the score change. Okay, so when we look at it tomorrow, we should see some colors where they mirror, and we're going to get a good signal. But currently you can see how red and green is a mismatch, so we wouldn't want to trade that. Likewise, EU is a mismatch, so we would be sitting on hands, we wouldn't be trading that. And GU is also a mismatch. In fact, there isn't anything that matches, so it tells us that today was a sit on your hands day, because at the big picture, these were actually sell, but we didn't really know what was going to happen with the Q&A. No one really knew, and now we're seeing an unwinding of dollar and those positions, and it's probably going to send cross dollar higher. So we're going to probably see this market bias shift in the coming days, and of course by that shift in the sentiment will also shift, because these guys are very counter trend, and then we'll start to see them sell cross dollar, which is often the case. And so that's that taken care of. So I'll do a video on that tomorrow. We'll get a use case scenario where we'll have a trade set up with stop loss and TP, and then so we can show you how to use that. So we're using that as a high level, and then we're using the score change for confirmation. And I guess that could be it. I suppose we can talk about gold. I don't want to make these long videos, but here's gold. So let me maybe zoom out a bit. Yeah, that's fine. Channel break, and then of course at the top of the channel with this big old wick, it's quite naughty. Could be, maybe that might have been a ruse, could have been a ruse, because look what happened. They shorted it. They looked at that and thought, well, maybe it's pretty bearish actually. And so looking at that, we did fall, and they're looking at that think, well, that's probably quite bearish, and they probably would have had their stops here. And then we had a big pump, and they were like, oh God, and then they just removed their stops and put it much higher, and now it's at 2200. That's where they put their stops. So they could have entered, and then price really went higher, and so they're like, well, I don't really want to get stopped out, I'd rather just move my stops. But they all did it en masse, and now it's at 2200. So that's likely, that candle there was engineered for a trap. That's if they knew what to expect from the Powell's conference. Maybe you'd think that the big banks would be privy to some information than, just compared to us. We're just mere retail traders. So it's potentially was a trap in advance. And I guess they're all they're basically just they're in bed with each other, aren't they, all these big banks? And they probably saw this coming, and so it'll become. So that's gold. And S&P I'll show you as well, because S&P is bonkers. S&P, bring that across, and away we go. And of course they sold, then they sold, and then they sold. So we made 3 arrows, one here, and then one here. So we can make a box on that candle, and then that's it. So I don't really want to make it a particularly long video, because I need to be quite brief, but there's lots to talk about. And then we can see how this is a demand area, and then tomorrow we'll see if we go from dominance to from euphoria to dominance, and that's the last phase. And then when we're in the dominant phase, the bears get squished, and then they have to exit, and that's how it is. So hopefully we see like some kind of normal market, and where we have an equal distribution of bulls and bears, and we're going to get like some normal moves. But as long as you're bullish and you're making lots of profit, it doesn't really matter. But I'd like it if we had some semblance of normality, and we haven't had that for the longest time because of the skew. There's 35 retail traders short versus the one buying, which is crazy. So that you could probably argue these guys have to get out. They need to be ejected. And that's today's video. So I'll speak to you guys tomorrow. Have a good night and trade safely.